Good morning, good evening, wherever you may be watching our live stream. We are live doing a do's and don'ts for FSS. A little Q&A, FSS went live earlier this week. Plenty of excitement, plenty of action going on, but there's a lot of mistakes that can be made. I for sure made one myself. I'll admit it later. But let's get into it. Steven, well,
Yeah, guys, go ahead, Steve. No, just the announcement of F assets this week. It was super interesting. I love it. I meant it like minute one that they announced it, and I'm super excited about it. And I think that there's a lot of new people, especially from the XRP community. As you know, XRPL is not a EVM chain, so a lot of the functioning is different. But we're here to ask any questions, to answer, to give some best practices. So where do we want to start?
let's start on the do's and don'ts from starting with minting. So I'll go ahead and say this is a don't. If you see that your transaction is taking a little longer, especially on the FXRP minting side, where it's confirming that you've basically made the payment or whatever, or the reservation for the XRP, don't exit out. Because if you do, in my experience, you reserve the fee with Flare, and it never mint the XRP. So like you get like a blank transaction, like no details or anything. And if you kind of like spam that, you are essentially giving away free Flare. So you got to be patient. Let the transaction actually go through.
For
'Cause
sure.
I think I gave like 20 Flare away just spamming it. So that's my personal don't. Be patient, let the transaction complete, and you'll get your FXRP.
Okay, yeah, that's a good one. So be patient. It actually takes around 5 minutes. One thing that I would recommend is that you check that before you start the transaction, you are sure that there's available lots to mint. I think that's important. If you try to mint, like right now, if I say mint, it's going to say that I have zero. Right now, I'm using my Ravi wallet, so I don't have an XRP address connected, so I can't actually show the mint. But yeah, it's important to know that if there's zero lots available, you can't mint.
So why is that? Again, that was built in, and I think we should cover the why that actually happens.
Go ahead, Days.
I wasn't saying anything.
Okay, well, the why kind of ties into making sure that nobody like scams the system and kind of loads it down. So the moment you make that first handshake, you've committed your Flare, or which was originally when we were first testing Songbirds, and the goal of that is to help kind of take care of the agents, when people are trying to scam it or push the system. To my understanding, is that correct?
Yeah, I mean, that would make sense to me. And that would be smart because you definitely don't want, like, I guess the blockchain version of a DDoS to happen.
So that's why it's super important to take your time when you're doing the minting and understand once you've committed those Flare, you could lose those Flare if you bounce out.
Right, right. And that's why people like us make the mistakes for you and tell you about it so you don't.
Yeah, the other thing I would recommend is that even though F assets are not, you can't mint F assets right now. Hugo said that next week they're going to increase to 10 million. And then it was like, I mean, the increases are going to be pretty big. And then by the end of October, the aim is to have 70 million XRP available to mint. So that's going to be a pretty crazy increase in a short amount of time.
I mean, because then you got to think what's already on the ledger already too, right? What's already on the network. So I mean, the TVL is going to be incredibly high soon.
Yeah. So let's make sure we clarify that for users. When he says 10 million, he's not saying in addition to what is already on the ledger, right? Like on the network. He's saying
Correct.
Increase of 10 million in addition to what we have.
Correct. So instead of having a 5 million cap, it's going to be a 10 million. Then I think it goes to 20 million, and then 35, 50, and 70 at the end of October.
Right. So to me, that sounds like they're only increasing it by 5 million. So I want to make sure is it an additional 10 million plus the 5 we've already had? So that would make it 15 million if we hit the cap, right?
Correct.
Okay.
Hey guys,
just making sure that's clear to everybody.
Yeah, so that is one part of the equation. I think that's a very important one to say. Another thing that I wanted to share with you guys, and this is something that I figured out this morning and I'm super excited about. We have the DeFi resources calculator, DeFi resources, and then right now we have a compound calculator. So this is going to be getting ready for Firelight minting or Firelight staking, I'm sorry. So let's say that you have 1,000 XRP and then your APR, I need to fix yeah, there it is. let's say that your APR is 7%. In 5 years, you can do the calculation. So total value, it means that you would be making around 91 XRP per year. And then here you can see exactly the interest rate. It's first 70, then 174, 225, 310, 402. So it's a pretty interesting way to just see how the calculation works. I am waiting to hear back from Firelight so I can get more information of how how is the calculation being taken into consideration. So take this with a grain of salt, but this is just a good place to start. And then the other thing that I wanted to show you is, let me copy this address. For example, this, if you go here to RFLR rewards and press search, this tool only reads from public blockchain data from the Explorer. So this is not storing any data. You don't have to do wallet connect or anything. This is just a way to read and check how much total RFLR rewards you have claimed over the years. So the next thing that I'm going to do this week is go to project ID and then identify which one is project 3, project 0, project 1, whatever it is. So I think project 3 is Enosis. So that's the next thing that I will be able to do. But this is a pretty cool way to see how much interest you have made over the years.
Yeah, and it'd be cool if we could kind of split it out into their own individual columns too. So like have a column for Enosis and be able to see your total claim strictly from Enosis or Kinetic or SparkDex or PlaySwap. That'd be pretty sick.
Yeah, I need to wait until in 2 days, there's the next reward claim. And then I will do one transaction by one so I can identify which projects are claiming from where. It's just that I need to do like one transaction, figure it out, do another transaction, figure it out. So I will do that in the next couple of days after we have the reward claims. And then all of this tells you what's your current value. And this is historical. And then you can see all your claims, the history. So that's pretty cool.
That's sick. So going back to the compound calculator real quick, is that specifically for XRP? Yeah, it's okay, XRP. Okay.
Yeah, I just made this super basic, trying to reach out to the guys at Firelight, and then I will work on it and make it better. So I will keep working on this. Just wanted to do like a little experiment to see, because it's kind of crazy how much you can actually make by compounding. You would be surprised.
Absolutely. Absolutely. Okay.
You want to bring up our DeFi 101, and then maybe we can kind of, show that little page so people know how to kind of get some of those videos and content. And I'd love to kind of cover after that, the high APYs a lot of people are saying are red flags.
Correct. Yeah. So if you go to flareforward.com or DeFiUniversityPro.com, you go to DeFi 101, and here you can have an overview of what is DeFi. Here we talk about velocity of money and compound. We tell you different strategies for your wallets. We talk about wrapping and staking in Flare terms. We do an overview of actual DeFi opportunities, lending and borrowing, liquidity pools, like everything. Of course, what Steven is saying, risk, like higher APRs means that there's higher risk. But I think that the main thing is how do you negate them by having knowledge and understanding of how things work. Because I think the biggest problem is that if you're just chasing a high yield and you're just clicking buttons that you don't understand, then there is a big chance that you're going to get burned. And I think that that's an important thing to have in mind, that the more you understand this, the better that you can manage your risk. And then sure, you can get high APIs without stressing too much about it.
Yeah, don't get wrecked. That's the name of the game. Don't get wrecked. Learn before you earn is my motto. So you got to give that friendly disclaimer. But we're going to have to update this pretty soon, the DeFi 101, with CDP and Firelight coming out. We definitely are going to be adding some videos related to that, just so that basic education and know-how is there.
Hey, yes, Coach. So we have a question here from one of the audience. Steve, can you monitor X in case there's questions, please?
Yes, sir.
All right. So S-Coach is asking, I'm loaning out FXRP on Kinetic. The yield is not in XRP. It's denominated in reward flare. Will Firelight give yields in FXRP or XRP? I'm a bit disappointed with Kinetic. All right, bro, you need to understand why is their yield, because they can't be yield just because. Right now, the FXRP markets on Kinetic are isolated. So that means that this market is completely independent from the primary markets. And that's a defense mechanism because FXRP is a new asset on the Flare networks and there's not enough liquidity to risk it. So if this goes bad for whatever reason, then it doesn't affect the primary markets. the APR that you get on borrowing and lending is from other people borrowing your own assets. So once FXRP is available to borrow, then you will start getting a small APY on XRP. Right now, this is only incentives. So that's kind of what I was saying before. This is not just clicking buttons to chase yield. It's really understanding what's going on and then implementing. So for example, this, I have SFlare lent and I'm only making 48% APY. And then I'm paying 9% to borrow USDT₀. This USDT interest that I'm paying, I am paying it to the people that are lending. So here, for example, this is going to be how it's going to look. You can see here. You have supply APY. That is the interest that you're getting paid in USDT₀ for lending. And then you have the incentives, which right now it's 19% in reward flare. So when people are borrowing XRP, if you are lending it, then you will get interest in XRP, but it's not free XRP just because you're lending it there. So if the higher the utilization rate, the higher the APY. In this case, you can see if the utilization rate between the suppliers and the borrowing is 36%, then you're getting 1.57 and you are paying 5.55. If we start going past 80%, the supply APY is 31% and the borrow APY is 47%. So the borrowers are paying the suppliers. It's not just free money just because that. And that's kind of what people are saying. Like, where does the yield come from? In borrowing and lending, the people that are borrowing the assets are paying the people that are lending their assets. I hope that was clear, Coach.
So what you're saying is, since there is none of that, Flare is going to prop up the ecosystem, give you a small APY for taking your time and staking it, so that they can let the system mature and then allow us to start earning our yield in XRP by opening up the market when Kinetic has everything balanced out.
That is correct. And then to be clear, you're not staking your XRP on like, let's also use the right terms.
Open for FXRP and USDT₀ as of now.
Oh, wow.
400.
Oh, wow. That's amazing. Okay. So if people
I wouldn't have sold all mine for arbitrage, but it's all right.
So yeah, Firelight will give yield in XRP most likely. We still don't have the details, but I'm pretty sure that that is a very different product. And that's the thing that we have to understand, that what service are you providing by doing DeFi? And that's how you can understand how are you getting paid for it. When you do LPs or liquidity, you're providing a service to the decentralized exchange so people can tap into your liquidity to be able to swap from one asset to another one. In borrowing and lending, go ahead.
I was just going to say, each DApp has their own like yield earning structure, right? So LPs, you're making trading fees, right? So you're able to make fees in like kind. So like say you have FXRP-USDT₀, and you're supplying that liquidity on a DEX. As people trade that pair, out of FXRP into USDT₀, or out of USDT₀ into FXRP, you're earning a percentage of the fee that they're paying in FXRP and in USDT₀. Right, on top of incentives that the network is having, which those incentives are denominated in RFLR rewards. But that's a bit different on the borrow lending side, right? So just making sure people understand that depending on the DApp you decide to earn a yield with or put your assets to work on, that DApp will have an earning structure if it's like a totally different product. Just comparing the differences between LPs and borrow lending markets.
Correct. So for example, here we have two people asking, futures bright, are those double-sided pools in Kinetic ISO market FXRP USDT? Does it split my FXRP? No, this is the same thing that I was saying before. This is not LPs, this is borrowing and lending. What this means is that you can borrow or you can lend FXRP and borrow FXRP, and then you can lend USDT₀ and borrow USDT₀. You can borrow only USDT, like you can lend only USDT and not borrow or the other one. So this is not a liquidity pool. And then we have another question. How about the Spartex FXRP USDT₀? It's a lot of RFLR over time. It seemed like it would be worth it. Yes, it's a nice opportunity. They have, I will make a post after this. I've been in the LP for 2 days. I have a pretty wide range. I go from $2.66 to $7. That is my trading range with FXRP, and I'm making around 30%, including reward flare. So the tighter you go, the higher the rewards that you get.
Why do you have that wide of a range? Let's talk about that a little bit, because I think, like I said, a lot of people just jump into the liquidity pool going, oh yeah, let's earn those RFLR rewards. Why you're a smart DGen guy, why are your ranges like that? Tell me about
This is about to turn into a masterclass, but go ahead.
it. For real, buckle up, guys.
For sure. No, I think that's important, and I think that's that's why we're here. When you
Right, that's an
provide
amazing question.
when you provide liquidity in a LP, you're actually setting a trading range. So you say, okay, I want to trade my two assets between this range and this range. Let's go one step behind. You have two kinds of liquidity provisioning. You can do full range, which is what we have currently on the XRP ledger. So you deposit 50-50, and then as the price moves, the pool is automatically shifting the ratio of those two assets, so you're 50-50.
You'll hear commonly referred to as Uni V2 style decks.
Correct. The thing is that you can do beat full range as well.
Yes, you can.
So that's why I don't want to confuse by going into the specifics. What I think it's important for like this basic class is that you have either full range, which means that your liquidity is going to be used from 0 to infinity, and the liquidity pool automatically, or the AMM automatically, is going to be shifting the ratio of your assets, so you're always 50-50. 50% in one asset and 50% on the other asset. One thing to understand is that you will always have more of the underperforming asset. If you have Flare and USDT₀, if Flare is going up, then you're going to have more stable coins. If Flare goes down, then you're going to have more FXRP. Because in reality, what you're doing is that as the price goes up, you're selling your XRP for USDT₀, and as the price goes down, you're buying XRP with your USDT₀. And then you have the
Be extremely careful with those ranges, because you could end up selling all your XRP for USDT₀ as XRP price goes up.
Exactly. And then
Well,
you have
do you mean to tell me that, you know, I'm pairing my FXRP with a random token at 2,000 APR, 2,000% APR? What are the dangers of that? The APR looks sweet.
correct. I think that that's another part that is very important to discuss. Only enter LPs if you are comfortable holding both assets in the long term. That APY that you see, especially with extremely volatile assets, it's just the last 24 hours. Doesn't mean that you're going to have that APY for a year. If, like I said before, you will always have more of the underperforming asset. So if you have, let me see if I can open a position to show you. If you have, for example, this is a RFLR USDT₀. The dynamics is the same. This is just a position that I have ready. In this case, I have my range between 0.2 and 0.3, which we have been ranging in that price for a few months. In this case, as you can see, with $145, made so far almost $5 fees, and these are paid in the two assets, because when you buy Flare, you're paying a fee in USDT₀ to be able to buy Flare, and when you sell Flare, you're paying a fee in Flare to be able to buy USDT₀. So you get both. In this case, I can also get my delegation rewards. In a few days, I'll be able to claim my Flare drop and the incentive rewards that you're getting. So what I'm saying here is that I'm willing to trade these two assets between this price range and this price range. So this is FXRP USDT₀. I guess if you guys are in this stream, it's because you're interested in figuring out how to do this. So we have FXRP and USDT₀. As you can see, I get some fees in FXRP and some fees in USDT₀. When people buy FXRP, they're paying a fee to buy it, and when they sell it, they also pay a fee to sell it. When you're in a liquidity pool, you're taking part of those fees. In this case, you can see your pool share. In this case, it's very small, so I get 0.0675% of the total fees generated. And this is what I was telling you about my price range. That means that if the price drops below 2.69 or 66, I'm going to be fully converted into FXRP. And then if the price goes beyond 7, then I'm going to be fully converted into USDT₀. The reason that I set up this wide range is because I don't know what the price is going to be doing in the next few weeks. And because I don't want to miss out on potential price appreciation, then I set up a wider range. And even though I'm making less fees daily, I'm going to be in range for potentially many months, and that makes it up. Because if you have a concentrated liquidity, you make more fees, but if you get out of range, you stop making any fees.
So what you're saying is that if I had a full range motion, I'm going to make less in fees than setting up a native
Would you
one.
say that your mindset differs between the assets that you're deciding to LP?
Sorry, I didn't hear that. What's up?
Would you say that your mindset changes depending on what assets you're LPing?
For sure. You could also have several positions open at the same time, one with a wider range and then some that are like smaller ranges to capture more fees. I think it just kind of depends on where we are and what is your purpose. One thing that I always recommend people in DeFi is make a plan and make your objectives very clear so that you can aim and do your decisions based on those objectives. If right now you're like, okay, I want to hold my XRP and make as much fees as possible, then I don't care about the XRP price. I just want to make as much fees as possible. Then that would be a very different strategy than if you're like, okay, I do care about the XRP and I don't want to be out of XRP right away. So I want to have a wider range. Somebody's asking, explain the lock. The lock, do not worry about this. This is just for like projects. If you start a project and then you want to inject liquidity, then you can lock it. And then that gives confidence to the users that the project is not going to rug. So you as a user, do not touch it. Like one recommendation from our friend Thanos in Enosis is do not click buttons if you don't know what they're doing. If you lock this liquidity, let's say for a year, and you're out of range, then you can't access that liquidity for a year. So do not click things that you don't know what they are.
So earlier, can you hear me?
Yep.
Okay. So yeah,
Yeah,
earlier I'd
yeah.
asked like, so what you're saying is you go to that tight range because you're maximizing the $216 between that range to earn fees when it's between that range. If I said I had even, let's say, $1,000 in full range, you're probably going to earn more in fees because you're on a tighter range than my $1,000.
So for example, right here, it says 92%. I think that this 92% is if you have a pretty tight range, because the tighter the range, the more concentrated your liquidity is. If you go here to the analytics, let's say B3, let's choose FXRP, and then let's do the FXRP-USDT₀ pool. I can see the volume. So the first day, there were $131,000 traded, going down a little bit. The TBL has been going up as time progresses. This is great. And then this is what is important. Here you can see the price up here. It says price, FXRP price. And then you can see how the liquidity is distributed across the ranges. The higher the liquidity, I wish there was a way to zoom out for this. You can see, for example, at 237,
No.
yeah, the 237, there's much less liquidity than at $3. So if you were in a price range between, let's say, 78 and 307, then you are super concentrated. So then that is going to make it that your share of the pool is going to be greater because you're much more concentrated. So you're going to make more fees and you're also going to make more reward flare. The problem is that if the price gets out of range, then you don't have any more XRP. The tighter you are, the more advanced you need to be able to track and understand the movements of the assets. So at the beginning, I would suggest always start small with small quantities, test it out, and then you can either set a medium or safe range, or you can create a full range, and then you're always trading, even though you're not making as much fees. Because if you get out of range, then you need to rebalance. And then that's when you get destroyed. If you don't know what you're doing, that's really when you lose money. So the more you have to rebalance, then your fees have to be greater than the rebalancing permanent loss that you incur. FXRP and USDT₀, for example, you can see the ranges. Oh, here's where you can see the liquidity map. So as you can see, there's liquidity from 0 all the way to like 7. That's where the most concentrated. And here at this point, it's where it's most liquid. And then you can say safe. In this case, you can see from 230 to 4. That does not necessarily mean that that is the best range. It's just a guide. And then if you go common, 260 to 346. And then if you go expert, you make it 5% and 10%. So you make it even tighter. Like I said, if you don't know what you're doing, I would recommend that you go into the safe or full range. And then when you go to expert, you can also skew it so you can have like less exposure to the downside and more exposure to the upside. That is also a possibility.
Guys, we have a tracker we built to help you guys understand all of this. So not only do we have the university there, we also have the DeFi Tracker Pro. for anybody who wants to be able to track this, understand this, and continue to work at it, don't forget to check that out for sure.
Yeah, I think I broke the app today, so I don't know if I'm ready to. I don't know if I'm ready to share the app right now. I haven't been able to test it.
Well,
Right.
one point I want to drive home is that what you basically went through is that you really have to have an idea of what your goal is before you even put liquidity on a platform. If you're doing LPs or bar lending, using LPs as an example, you basically did what I would call a top-down analysis, right? So you started with whatever your goal was. You know, you set a full range for you because you mentioned that you don't know what the price is going to be, or you don't really know how price is going to react right now. So you set a full range. So yes, you'll be making less fees, but you'll always be trading. It really will give you enough time to react if price goes crazy, and you can adjust where you feel you need to. Now, if you were to tighten your range, one, you'll be managing that position a lot more, right? You have to keep that in mind. Do you want to babysit your positions quite often? Or do you want to be able to take a more relaxed approach and not have to worry about being out of range as much? That will determine how you approach LPs. And then, of course, borrow lending, it's a bit different, but different approach for different depths. You really want to make sure we drive that point home.
For sure. And the other thing that I want to say is that you can always start from a wider range when you're uncertain, because if you look at the charts, you usually see a breakout and then the range kind of compresses and then it just kind of stays in one range. So you can go wide, and then once we find the range, you can tighten it. But when there's uncertainty, and right now it's so much uncertainty that it's kind of hard to predict what the price is going to do next. So that's why I'd rather be in a wide range, even if I'm making a little bit less fees.
I mean, those APYs and fees look incredible. Why don't I just go buy the FXRP asset even though I can't mint it and start making some money?
Yeah, that's another thing that it's very important. If we go to the screener and trading view,
AFO is all I have to say.
Hey, I mean, I already cashed out. I have no FXRP. Believe that? I have 0 FXRP at the moment.
Yeah, same. I'm also out. All right. So one thing that is important to note is that when you go to a centralized exchange, the prices are set by order book. So that means that somebody says, okay, I want to buy this amount of XRP at this price. Once that order gets set, it runs to the next order available. And that runs on both sides for buys and for sells. Now, the centralized exchange, the dynamic is a little bit different because you are basically trading. You're providing liquidity, and then users are buying and selling. So the price between a centralized exchange and the price of a decentralized exchange is completely different, and they're independent. There's no way to connect them other than people actually taking advantage of those discrepancies. If I go to TradingView, which you have seen this, the price right now is 2.80. And then if I go to Dex Screener and then here I press FXRP, you will see that the price here is Spartex. You can see the little thing. And the price here is at 2.88. So right now you are paying 2.76% more to buy FXRP. And because the caps are minted, that slows down the arbitrage opportunities. So that's why the price is different. So before you buy, make sure that the price in the centralized exchange it's a fair price for what you're trying to buy. Because if you're paying 3 or 4% more for having FXRP, like you're not going to make that up in the next few days just to participate 1 week early. The caps are going to be increased every week. So right now, unless the price is very similar, I would not recommend that you just go and buy, because you're going to be paying more for that FXRP. All right, and now I want to do something else real quick. All right, should we do a little demo of how to use different platforms?
Let's do it.
Okay, right now we have, there's 2 questions here by OVNI Coverage. If a pool was created which had both stake XRP and FXRP, would that be the best pool to be not to lose any XRP? Yes, that is a low risk and low impermanent loss pool, because both assets are going to be trading in a similar manner. Like maybe one day there's a difference, but in general, those pairs are going to have a very little difference because they're correlated.
Right there. Very important word.
Right. Now, the one thing to consider, and this is also very important, is that the more risk you are implying on an LP, the more rewards that you're going to get. So the safer the pool it is, the less money that you're going to make, if that makes sense. And then the other person is saying, what is the worst case scenario being out of range, just a loss of fees or principal? No, when you're out of range, you don't lose the principal, like you still have it, but you're fully converted into either asset. So in the case of FXRP and USDT₀, if it's in the upper range, you would be fully converted into USDT. And if it's in the lower range, you would be fully converted into FXRP. You are out of range, you're not making any fees.
So if you had it super tight and you put like all of your XRP into a liquidity pool and super tight and your cap was like 310, XRP went to 350, you would have sold all your XRP for USDT₀ at 310 and you'd have no XRP. And if XRP did not come back down below 310, you would then have to buy all your XRP back
At the higher price.
At the higher price.
Correct.
So that's why it's super important, when you're looking at that, because with XRP, a lot of people understand like it's going to go up. There's going to be some big jumps where it's not going to come back down, and so you don't need to be in these unless you fully understand like the risk reward and don't have all your eggs in one basket. I mean, none of us do that even at the degen level.
Correct. All right, and then one of the things that I love about Flare, and this is one of my favorite things, is that Flare is a great place to learn. So I'm going to show you with how little money I can actually do LPs and everything. So I'm going to sell 0.30 FXRP for USDT₀. First, I need to approve the spend. I'm using my Rabbit wallet, but this can be done also from Bifrost or from the 0.30 XRP is going to give me 0.86 USDT. I'm going to swap them. The top is what you're selling and the bottom is what you're buying. And this, I could change it to Flare. I could swap between FXRP and Flare if I wanted. All right. So spartex.ai and swap. And then let's enter a liquidity pool just to show you guys how it works. I'm going to do a manual. I don't like automatic. There's not available for FXRP right now, but automatic, the problem is that it's constantly rebalancing for you. And when we have so much volatility like we had in the last few months, one spike of price that then comes back, then you might have one or two rebalances. So in my opinion, I'd rather have control of how this works. You're going to choose the select fee tier. In this case, it's going to be the 0.05%. Make sure that it says APR boosted, and then let's enter one with a full range and then one with an expert. So I'm going to do full range and then, there it is. So right now, as you can see, the minimum is going to be 0 and the maximum is going to be infinity. And then here, I'm going to choose half of, we have 86 cents, right? So I'm going to do 20 cents. And that means that 20 cents in USDT₀, it's 0.06 FXRP. I press add liquidity, confirm. As you can see, here it is. 0.0019 Flare for gas, super cheap. So right now you're going to see this is 40 cents. This is a 40-cent position. I opened one. All right. Now let's do an expert. And let's say that I want to do, let's do a common. I want to have from 260 to 347. And then let's do another 20 cents. And this one, as you can see, is a higher amount of FXRP because I have a minus 10% to the downside and 20% to the upside. So now I'm going to do add liquidity, confirm. All right. Now I have a 50-cent LP position. So you don't have to enter with thousands of dollars to be able to do that. Of course, if you have 20 cents in a LP, it's going to take a while for you to start seeing any considerably fees. But if I mess up with these 40 cents and I lose it, I'm not going to bang my head against the wall. And if this was a few $1,000s, I would be very upset. So right now we opened 2 different LPs as an example of how to do it. It's super easy. You can do it. You can test it out. You can see how the assets move around. And the more you do it, the more comfortable you're going to be into opening liquidity pools. As you can see, this one that has the concentrated liquidity, I'm 37% in USDT and 62 in FXRP. If I go to the full range, it's pretty much 50-50. All right. Now let's do the same thing in a LP in Enosis to teach you how to do it. Here, let's open a RFLR FXRP just to show you something different. This one, the same. I don't wanna trade against my Flare price appreciation. So in this case, I'm gonna set up a full range. I'm gonna choose RFLR. I have 14 FXRP and 95 RFLR. So let's do something small. Let's do 20 So that means that 20 RFLR, it's 0.17 FXRP. I'm going to have to approve two I am approving that this smart contract can use my tokens. In this case, with Ravi, I can set up how much I'm approving. So I'm approving just a little bit more. I'm going to say confirm. Then I'm going to approve my FXRP. And same thing here. I'm going to approve only 0.19 FXRP with this smart contract. And then once I have that approved, I can see that I'm in full range, and then I'm going to create position, confirm. Now let's use the swap function on Enosis just to teach you. So that this is like a full breakdown of how this works. And then let's use FXRP. And now let's buy back the FXRP that we sold earlier. So I'm selling almost 50 cents of USDT₀, and I'm buying FXRP on this side. Right now, I'm going to have to approve USDT₀ as well because each function is a smart contract. So this is the safer way. When you do unlimited approvals, it gets a little bit more dangerous because if there's a hack, that smart contract has access. So whenever possible, like yesterday, I went through all of my wallets and I revoked all the contracts. I'd rather do it again than have contracts that have been approved 3 years ago and I don't even know what those contracts do anymore. All right, so now it should have gone. Oh, okay, so I approved and now I'm going to swap.
I'm sure you got everybody's head spinning with that one.
With what?
Smart contract still connected.
Yeah, so if you go to revoke cash, you connect your wallet and you go to Ravi, connect. Oh, because I need to be in Flare networks, that's why. So this is important to check because sometimes you might sign something and then you don't even remember that it's there, and that could be a potential problem. As you can see, some of them are very specific amounts that are approved, and then yeah. So in this case, I have no problem because I'm approving only the amount that I'm spending. So this is a good way. And then if I wanted to revoke it, I would just change it, like revoke selected. Now let's go back to Kinetic. So we learned how to swap between FXRP and USDT₀. If you choose another asset, then you can swap back and forth from it. Everything is done from my wallet. I do not have to ask anyone for permission to do it. And no one can freeze my tokens just because Coinbase thought that I was suspicious or anything. So this is fully decentralized. This is super powerful. I mean, now that I can trade my XRP other than arbitrage, I really have no reason of why I would even go to a centralized exchange unless I'm arbitraging or I'm off ramping any money to like real life, then I would go to a centralized exchange. Otherwise, I do everything on Flare and I love it. Now let's go to we're on Kinetic. The wallet has to be connected. I'm going to choose FXRP. I'm going to press max. Now, same thing. I'm going to approve. I'm approving only the amount, a little bit more of the amount that I have. Confirm. Guys, if you're listening and you have any questions, please write them down in the comments and I will do my best to answer any questions that you might have, okay?
Back on the arbitrage thing, it really has to be a difference between the two prices that makes sense. When you calculate like platform fees that exchange may be charging for the swap, all those things, are you coming out of profit? If not, it's not really.
Yeah, arbitrage opportunities are not something that are always there. It's more like you see it and then you execute. If you take too long, then the opportunity is gone. So don't think like, oh, I'm just going to sell here and then buy there. Like that might work or might not work. All right. So now I supplied FXRP into this and let's see if there's still some. If I go down, I can see that the 400K is already supplied, but let's borrow a little bit of FXRP. And now you will see that the supply APY is 0.07. In this case, I guess you could borrow FXRP and resupply it. So let's do that just to show you how it works. We're going to go supply and borrow FXRP, and then let's borrow. So we have 15 blend. Let's borrow 3 XRP. I know why. I need to enable it as collateral. Use FXRP as collateral. This is important. If you don't have that, then you can't borrow against your tokens.
I think you're assuming.
All right. So borrow FXRP. Let's do 4. All right. So what are we seeing here? I have 15 XRP length, more or less. So my limit is 8.50. That is called the loan to value ratio. So you can't borrow 1-to-1 because then it wouldn't be over collateralized. So from my limit, if I borrow 4, that means that I'm borrowing a little bit less than 50% of my limit to borrow. So my health factor is above 2. The closer you are to 1, the closer you are to getting liquidated. In this case, because both assets are moving in the same price range, the price difference is going to be slower other than the interest that you're paying. But my recommendation, if you want to be hands-free, always be above 2 health factor. You would need to check it maybe once every other week or once a month. If you want to be a little bit more active, you could go down to 150, but you need to know exactly what you're getting into. Don't just click buttons just because, oh, Well said that you could do 150, because I don't want to be responsible for your bad decisions. I'm trying to teach you and explain how things work. But if you're at 150, then you have to be way more active than if you're at 2. All right, so now I borrow more FXRP.
Yeah, I mean,
and then I can resupply it just to show you how I'm looping. This is called a looped position. So I'm supplying, I'm borrowing, and then I'm supplying again. Go ahead, Ace.
I was just going to say, like, when I'm talking to people about health factor, you and I, we have jokes between each other. I'm very conservative personally. I always like to feel comfortable at 2, but 150, 1.5 or 1.5 is definitely doable, but it all depends on your own personal risk appetite, So just keep that in mind because everybody is
correct. So for example, Coach was asking, I don't know if he's still here. As you can see right now, this 0.07%, it's paid in FXRP. So it's very minimum, but what you have to understand that is not only that APR, it's like what can you do with that capital that you're getting access by enabling borrowing and lending. So sometimes, for example, just to give you an example here, let me show you the Tipjar wallet that I have. So here I have 56,000 SFLR that I'm getting 0.48% APY, correct? But then from this money that I have borrowed, which is a little bit less than half of my available, then if I go to farms and deposits, in this pool, I'm making 44% in FLR, not in stablecoins. So that means that I'm paying 9% to borrow and I'm making 44%. If I'm bullish in FLR, which I am, then I rather have more FLR, even if I'm paying to get that FLR. And then my FXRP is giving me around 90%. Let's do half because I'm in a wide range. Let's say that I'm making 40%. So again, I'm making 0.48% by lending my SFLR. I'm paying 9.31% for borrowing stablecoins, but then I go to liquidity pools and I'm making this amount. So it doesn't need to be a genius to figure out that that logic makes sense. Now, the strategy of lending a collateral being a volatile asset and borrowing a stable coin works when you think that the price is going to go up. Because if I believe that the price of crypto is going to keep going up, then my collateral value is going to keep increasing. So this becomes healthier as the price moves up. If I thought that the price of crypto was going to go down, then technically what I want to do is supply collateral in stablecoins so that my collateral value is not changing. And then I would be borrowing crypto that I know that in the future is going to cost me less to pay back. So there's a strategy there's a strategy for a bull market and there's a strategy for a bear market. I believe here in this part, we talk in general terms about it. And then we have the DeFi den, where we have in-depth videos on strategies on how to open LPs, how to borrow and lend, how to apply different strategies, and so on and so on.
So
Go
I'd
ahead,
like you to
Steve.
kind of go back to that borrowing and lending page. How does that interest borrowed work? Because I know of a scenario where, let's say you had $100,000 and you're pushing that envelope and you're not paying attention to how that interest borrow, where that goes. Because a lot of people don't understand, if they borrowed money before, they just pay their thing. They don't understand where that interest is. Since you're not making payments, where does that interest go? How does that work? Because that is definitely applied to your risk appetite factor, especially as you move up in volume and total capital you have invested.
For sure. So the interest rate
especially utilization.
for sure. For the interest rate gets added to your collateral and to your debt. And remember, for me to be able to unlock this collateral, I need to be able to clear my debt so that then I can unlock this. So for example, if I press withdraw, I have 50,000. I can't withdraw because then that would drop me below my health factor. If I do 10,000, which still keeps me over collateralized, then I would have a health factor of 1.39 and I can withdraw it. If I want to withdraw more without the risk of being liquidated, then I will need to go and repay my debt here so that then I can unlock more collateral. So this APY is going to be added to your debt. You don't claim manually or anything. In LPs, it's a little bit different because here, if I go to pool, not this one. If I go here, you can see that I have fees that I can actually claim in FXRP and USDT₀. So at some point, the fees that I'm making here, I could use them to be paying back my debt. It all depends on where we are on the cycle. If I think that we're closer to the top, then I'm going to use all my fees to pay back my debt. And if I think that we're closer to the bottom, then I'm going to use all my fees to accumulate more crypto. And one thing that borrowing and lending enables is that this is my treasury bag. This enables me to have a bull run bag. So my treasury are the set of assets that I'm happy to hold long term and that I always want to be accumulating more. And then I have a bull run bag that is my profit taking. That is my war chest. That is the money that I can use to execute transactions. So I can have a long-term strategy and a short-term strategy. But in my case, I always want to have more flair. Sure, if we go to $1, of course, I'm going to sell some of my flair, but I don't want to get rid of all my flair because I do believe that no matter what the short-term price action does, I do believe in the future of flair. So I want to have more flair. So maybe from my fees, I use that to take profits when we have a high valuations. And then at some point when the price retraces, then I can buy more flair because that is my objective. Coming back to what we were saying in the beginning, it's like I have to have a clear objective of what do I want to do? Do I want to have a cash flow? Do I want to pay for my living expenses? Do I want to buy a car? Do I want to pay for my wedding? Whatever you're doing, in my case, my XRP and my flair, those are my treasury bags. Those, in the long term, I want to have more of what I have now. Now, the fees, I'm happy to sell because those are interests. And I think that the purpose of DeFi is that at some point, we have enough capital working for us that can pay for our lifestyle. Imagine that instead of being crypto, but it was a rental, like maybe with one rental property, you don't get enough money to pay for all of your expenses. But if you had 20, that would be more than enough to cover for your basic necessities. So you're not selling your rental property to pay for your lifestyle. You're selling the interest that you're getting from those assets to be able to pay for your lifestyle.
Dropping gold.
For sure. All right, guys. I mean, we've been going over an hour. If you guys want to learn more, we have a tons of videos on our YouTube and we explain all of these concepts. If you need help and you want to go more in depth, then you can subscribe to the DeFi Den. You can also reach us on X and ask questions. The Flare community is extremely helpful. And then whenever somebody has a problem, there's 10 people jumping in to help them. So don't be afraid to ask questions. Make sure to test with small amounts before you commit. One thing with DeFi is that it empowers users, but it does not enforce good decisions. The system works and you can make a really good or a really bad decision. And there's no one that can be like, oh, no, don't do that. So unless you're sure what you're clicking and what you're doing, don't overcommit. I understand that these assets are very powerful and they're very hard to come by, and don't throw them away. The whole purpose of DeFi is to increase your holdings, not to decrease them. So if you have any questions, please let us know. Check out our videos. We're going to be publishing videos every week. We still have a few that are already lined up for next week. And yeah, looking forward, I think that F assets are going to be big. I have to say the cap got reached in 4 hours. That was insane. And this has been the most successful XRP launch in the history of crypto. And this is just the beginning. So let's keep learning. I do believe that part of Flare winning is that we have a very strong and educated community that we're all making good decisions together, as opposed to having a few people making a ton of money and everybody else losing. So that's our intention. We want to teach you guys to make better decisions with your crypto and that we can all win together. Nothing would make me happier than to have people to be able to celebrate other people's wins. That makes me super happy.
Yeah, for sure. I mean, we celebrate each other's wins, like even if we miss out on the opportunity. It always feels good when somebody shares that, they made, an additional 6% than what they're used to or whatever. They executed on a certain play and, they may teach us something. I don't know, but it's always nice when you get to hear about other people's wins and share your own as well.
I look forward to seeing you guys today. Like I said, it's ready for a super exciting ride. We'll have another another space next Friday. Not sure exactly if we'll do the same thing or not. We're going to discuss that offline. Definitely, if you missed the space, see you later. You've got some more questions. We are going to host another one next week. So look forward to having you.
Yeah. All right, guys. Thank you for joining. Please like and subscribe. Share with your friends. The video is going to be uploaded so you can watch it in the future. And ask questions. Be curious. Do not be stubborn. And trying to figure out what you don't know is what's going to make you win in this space. All right, guys. Until next time.